In 2025, one side says crypto is the absolute future of finance. The other side says stocks are the only serious way to build generational wealth. But the real winner may not be the one you think. If you listen to the noise, you will hear two completely different stories. Crypto enthusiasts talk about massive upside, the impact of Bitcoin ETFs, the rise of AI-driven tokens, decentralization, and the kind of life-changing gains that the traditional market just cannot offer. On the other hand, seasoned stock investors talk about stability, quarterly dividends, reliable index funds, real-world companies with physical assets, and the slow, steady path to becoming a millionaire. Both sides are convinced they are right, but in a world where the financial landscape is shifting faster than ever, the old rules don't always apply. By the end of this, you'll know which one actually wins in 2025. We aren't looking at hype or Twitter rumors. We are looking at risk, returns, taxes, accessibility, and who each investment is really for. Why does this matter right now? Because 2025 is not the same market we saw in 2017, 2020, or even 2021. The debate has fundamentally changed. In 2025, both markets have matured in ways we didn't think possible 5 years ago. Crypto is more mainstream than it has ever been, with major banks and institutional players holding the keys. At the same time, the stock market is being aggressively driven by a revolution in artificial intelligence, shifting interest rates, persistent inflation concerns, and a level of global uncertainty that keeps everyone on edge. Retail investors now have more access to both worlds than ever before, with apps that let you swap between an S&P 500 index fund and a digital asset in seconds. But more access also means more confusion. This is no longer just a battle of risky crypto versus safe stocks. The real comparison is far more complicated because the lines are starting to blur. One asset might win for pure growth, while another wins for survival, and your personal best choice depends entirely on your own survival of this economy. To give you a real answer, we have to define the battle. We can't just throw vague advice around. We are going to break this comparison into 8 key categories: potential returns, risk and volatility, ease of investing, long-term reliability, income potential, regulation, security, and beginner friendliness. Comparing the entire crypto market to the entire stock market is a mistake because both categories are massive. To keep this fair and practical, we are going to use 2 gold standards. For crypto, we are focusing on Bitcoin and major established digital assets. For stocks, we are looking at the S&P 500 and high-quality blue-chip companies. This keeps the comparison honest. We aren't comparing a lottery ticket meme coin to a stable utility company, and we aren't comparing a failing penny stock to the world's largest digital currency. We are looking at the heavyweights of each side to see which one deserves your hard-earned capital this year. Let's start with the category that gets everyone through the door. Round 1, return potential. Historically, crypto has offered explosive upside during its bull market cycles that stocks simply cannot match in the same time frame. We have seen Bitcoin and Ethereum outperform every other asset class over the last decade. A small crypto position, if timed correctly, can sometimes outperform a much larger stock position in a fraction of the time. However, stocks offer a different kind of power. Stocks are backed by companies with actual earnings, physical products, established cash flows, and real-world demand. While a crypto asset might jump 300% based on sentiment and adoption, a stock portfolio grows through the compounding of corporate productivity. The key difference is speed versus predictability. Crypto can move incredibly fast, staying flat for months before jumping violently in a matter of weeks. But it can also crash just as fast. For 2025, crypto wins for pure upside potential, but stocks win for consistent long-term compounding. Time for round 2, risk and volatility. Crypto dreams often meet hard realities here. Beginners may not be able to detect quick crypto price drops, market emotion, a regulation story, exchange troubles, or social media buzz can move the needle 20% in a day. Despite falling stocks, broad index funds are less volatile. A 10% S&P 500 loss is a correction and major news event. Bitcoin dropping 10% is a usual Tuesday. Individual stocks might be dangerous, especially if you're pursuing a trend, but the stock market structure provides a floor that Bitcoin lacks. Investor behavior is 2025's biggest risk, not the asset. Crypto investors buy while it's viral and panic sell when the market dips. Allowing emotions to rule might destroy your fortune. Stocks gain for predictability and lower volatility. Third round is easy. Your initial path matters. Stocks are easier for beginners. Retirement accounts, index funds, and ETFs are simple. Open a broking account, automate a broad market fund buy, and never look back. No blockchain network issues, private keys, digital wallets, or gas fees. Crypto requires additional expertise. Beginning users must learn how to move assets, secure their seed phrase, and spot a fake coin. Crypto is more interesting than stocks, which are easy to start. The excitement of crypto beginners causes many injuries before mastering the basics. Stocks are great for beginners since they offer the lowest entry barrier and fewest technical errors. The fourth round is liquidity and accessibility. Unique digital success. Crypto trades 24/7. Trade Sunday mornings at 3 a.m. Exchange hours affect stocks. Saturday big news must wait till Monday a.m. to affect the market. Even where broking accounts are difficult to open, crypto is available worldwide. 24/7 accessibility has pros and cons. Since the market is open 24/7, it's simple to overtrade, check your phone every hour, and make emotional decisions at night. Forced stock market breaks help investors stay focused. Crypto is easier, but equities prohibit self-sabotage. Value is explored in round 5, the foundation of any investment. Stocks represent business ownership. Company shareholders possess equipment, patents, brand, and earnings. iPhones and Coca-Cola will remain valuable if bought. Value of crypto fluctuates. Network adoption, digital scarcity, utility, and consensus are needed. The fact that governments cannot inflate digital gold is Bitcoin's main argument in 2025. Ethereum promises to power a new internet. Crypto tokens are often speculative and underutilized. Cryptos vary. Numerous phony assets exist alongside Bitcoin and other valuable items. Top crypto assets win for innovation and scarcity, while stocks win for business fundamentals. Round 6 addresses a major goal: passive income. All want their money to work while they sleep. This is done via stock dividends. Dividend-paying stocks and ETFs bring in quarterly checks, a reliable supplemental income approach. Staking incentives, lending yields, and decentralized finance generate crypto passive income. Many of these yields are higher than stock dividends, but riskier. If a 10% crypto platform fails, you may lose money. High crypto gains can hide risks until it's too late. Stocks are preferred because they provide safer, more consistent passive income over decades. Round 7 covers safety and regulation. Stock markets are mature and regulated. While investors can lose money if a company performs poorly, the market process prevents fraud and systemic failure. Although institutional acceptance is improving, crypto remains unregulated. Exchange hacks, scams, and failures abound. There's custody, brokers secure stocks. Many crypto users must protect their investments. Independence is freeing, but taxing. Lost keys cost money. Stocks offer regulation and insurance for the average investor. Crypto gives workers independence. The psychological trap is more important in 2025 despite technical changes. Choosing the wrong asset class rarely costs people money. Mentally, they lose. They buy Bitcoin or stocks when the price climbs and everyone talks about it. People sell after a routine market dip out of fear. They ignore risks and overinvest rent or grocery money to generate quick money. Crypto attracts fast-moving investors, while stocks attract dull investors. Both opinions hurt. Crypto and stocks aren't 2025's biggest challenges. The enemy is impatience. Whether you buy a digital token or blue chip stock, the market will take your money if you can't stay disciplined for months. Which investor should pick stocks? Beginners, long-term wealth builders, and low volatility investors love stocks. Stocks let you plan for retirement, obtain consistent dividends, and avoid market charting. Boring can boost an investment over time. Conversely, who should pick crypto? Crypto is for financially stable people who can handle extreme volatility. Use an emergency fund and invest money you can lose to expand your portfolio with crypto's asymmetric upside for blockchain and digital scarcity believers. Crypto can boost your wealth, but not exclusively. A mix of both may win 2025. Most successful investors use both assets for different aims without taking sides. Stable stocks expand with the global economy. Crypto is high risk, high reward technology exploration. Keeping 80 to 90% in safe assets and 5 to 10% in crypto is common. Old world safety and new world promise. A realistic risk management strategy to stay in the game, not financial advice. The 2025 verdict is clear. The answer is stocks are more reliable. Crypto has the greatest potential. Stocks win for beginners, consistency, and passive income. Most people get rich with stocks, then crypto. Don't believe hype or tradition. Best investors are all-arounders. Which would you put $1,000 in for 5 years? Why? Comment below. Want debate?